Welcome to our webinar, Don't Fumble the Handoff, Win with the Business, the Owner, and the Successor, in which we'll discuss generational wealth transfer, business ownership transitions, and how financial institutions can leverage digital solutions to onboard, engage, grow, and retain client relationships. I'm Taylor Adkins, Vice President of Product at Alkami, and I'm responsible for our digital banking platform, including our retail and treasury management solutions. And I'm joined today by Terry Wagner, Executive Vice President and Director of Treasury Services at First Fidelity Bank. Terry, please take a moment and introduce yourself.
Thank you, Taylor. I'm excited to be here with everybody today. So, as Taylor mentioned, my name is Terry Wagner. I'm the Director of Treasury Services for First Fidelity Bank, which is about a $3 billion community bank based out of Oklahoma City. We have a market presence in Oklahoma, Arizona, and Colorado. And I'm responsible for our treasury management sales teams, our strategy, and product as well.
Thanks, Terry. And before I move to the next portion of our webinar, I want to remind everyone, please submit any questions you have via chat. And I promise we'll get to you. We'll be responding to as many as we can via chat throughout the webinar. So as either one of us isn't talking, we'll be responding to your questions. So please keep them coming. So we're in the midst of the largest intergenerational wealth transfer in history. I think, that's something that we're all aware of. It gets hyped a lot in the media. With millennials alone set to inherit over $46 trillion. These rising generations are digital first, expectation driven, and looking for long-term financial partners, not just service providers. And there's intense competition to capture this money in motion. And if your institution isn't actively planning for this wealth transition, uh, you're losing the connection, the deposits, and the opportunity for growth that these clients represent. Over half of US employer owned businesses are nearing retirement age, with 74% intending to transfer ownership. However, retention doesn't always result in action, with only 35% of sole proprietors having an actual transition plan in place. This is where financial institutions can step in, guide the wealth transition, and retain the relationship across generations. A question for Terry. You're working with business clients every day. Are you seeing this transition happen in real time? And how are business owners approaching the idea of succession or retirement planning?
So, great question, Taylor. And I'm sure, all of the bankers on the line would agree with me. But yes, we are absolutely seeing this in real time. It's interesting because when you think about, the larger, I'd say middle market, mid corp, large corporate customers, historically they're banking with large national banks that have an investment banking division within their bank and within the product sets that they provide to clients. And so, those large companies are really proactively called on by their bank, by a number of other, institutions, private equity, things of the like for succession planning. And so they are getting a lot of consultative advice, to really plan for the next generation of that business. Where we are seeing is that smaller businesses really don't have access to the same advisory. So a lot of times those are self-sourced for small businesses to go out and find, if it's a CPA or an attorney, or wealth advisors to really help facilitate, what the next stage of their business looks like. We're also seeing that, it's not necessarily what you would think of as far as passing down a business to either key individuals within the company and or, family members, children, things of the like, for the next stage. And so really those small companies are having to figure out what is the value of the company? How do I make sure that my, accounting and finances and everything is clean from the perspective of, making sure that if there is an outside buyer that's coming to the table, that they're going to feel confident with that. And what we are seeing is that oftentimes by the time they do engage, either attorneys, CPAs, some sort of consultant, that they're about 18 to 24 months behind, really where they should have been, as far as, making that transition happen. And so, I would say if you've got customers out there and or are one yourself, the earlier you can plan that transition and even just starting to do some of the pre-work, the better off the business will be.
Yeah, agreed. And this represents a huge opportunity. The money in motion opportunity in front of us is massive, but capturing it will require financial institutions to deliver consistently excellent connected experiences across the entire business client journey from onboarding all the way through to succession. At Alkami, we built a digital sales and service platform that brings together three core capabilities: account opening, digital banking, and data driven marketing into a single platform. These functions are often siloed within financial institutions, creating a disconnected client experience and lack of operational visibility and awareness for relationship managers. Alchemy's digital sales and service platform unifies account opening, digital banking, and data driven marketing to anticipate client needs before they ask. We call this anticipatory banking, and it's a modern extension of traditional relationship banking. Banks and credit unions have built their business on personalized service and establishing deep relationships. And at Alchemy, we're bringing the same personalized service and relationship focus to digital banking, helping institutions scale relationship banking across both physical and digital channels. So let's take a closer look at how this comes to life across four key areas of the client journey. Number one, how you onboard new clients. Two, how you engage them over time. Three, how you grow the relationship. And four, finally, how you guard it through proactive fraud prevention. So let's start with onboarding as we kind of double click into those four critical areas. This critical first impression sets the tone for the entire relationship. However, onboarding today isn't just about paperwork and approvals. It's about delivering speed, simplicity, and value from day one. Effortless onboarding is also critical for growth and transforming your institution into a revenue engine. Many financial institutions have introduced business account opening, but most digitally mature institutions have taken strides to further automate account creation for both core and digital banking. Automation is sometimes conflated with straight through processing, but it doesn't have to be that complicated, at least not in my opinion. Automation is about digitizing the process and making the process less labor intensive for employees, applicants, and account holders. 64% of mature institutions have taken the critical step of automating account creation in the core banking system and in digital banking, leaving the rest of the industry struggling to catch up. And so with that, Terry, I have a question for you. From your perspective, what makes or breaks that first impression uh, when onboarding a business client? And maybe secondarily, what strategies have you deployed to attract new businesses, outgoing owners, or rising successors?
It's I would say this is a very key, topic that I think most banks are talking about right now. I will say the onboarding process has come a long way in the last, 5 to 10 years. If you go back 5, 10 years, I would say largely probably every bank that I can think of was still doing wet signatures on new account documents, on onboarding forms, things of the like. So even the introduction of things like an e-signature, were really huge as far as that digital experience, right? But what we're looking at is really taking that one step further and figuring out, how do we make the onboarding seamless for customers? Because we know that that is the first impression that they have with the bank. And so I kind of split that into three different parts, which is really the digital experience, the documentation and requirements, and then the communication. So from a digital experience, finding an onboarding platform similar to what Alchemy offers, right? That really allows us to, open up the accounts, have the new treasury services onboarded, and a very clean, intuitive interface that allows customers to be able to track that, process from start to finish. I would say the second piece from a document standpoint is really just making sure that there's checklists, that the documents are simple, easy to understand. I said earlier, using things like e-signature, so there isn't time wasted on waiting for wet signatures. And really, I would say transparency of fees has become a big topic, for treasury management customers and commercial customers as well. And then lastly, communication. I think this is something that banks traditionally thrive at, which is proactive communication. making sure that you're clear with response times, timelines, and then just really being transparent in the communication if there are delays. But this is something where I think, in moving to a smaller community bank, we've been really able to set ourselves apart because of the way that we are able to onboard clients. And typically that can be done in a much shorter time frame than what I've historically seen larger banks onboard clients.
Well, and you mentioned communication a couple of times. I have to imagine that that's a critical element when you're dealing with the challenges that an outgoing owner and a rising successor represent. How are you using that in a big way to kind of address those transition challenges that you're seeing?
Oh, absolutely. And I mean, banking is still a people business, right? And so, really the proactive communication is key. And the earlier that the banks can be involved in a transition, the better the experience is going to be. And so, while we were, not necessarily providing the advisory for the transition to happen, we are definitely making sure that we're involved, introducing them to other partnerships that we may have that can help facilitate that, but then also making sure that they understand what it will look like to transition, their accounts, their, administrators, things like that on the banking side as well.
Well, I can imagine it's a tough journey, especially for a successor, kind of graduating from operator to owner. There's a lot to cover, and they definitely need a guide throughout that process.
Yeah, and I would just say, if you're not being proactive in that transition, most likely I would feel like you're going to lose that relationship because, the successor may already have an existing banking relationship, with another bank. And so you've got this key opportunity to come in and really show your value that you bring to the business. And so that proactivity and the communication and the transparency is really key in maintaining that relationship.
Yeah, I couldn't agree more. And so let's talk a little bit about how account opening powered by Mantle supports scalable growth for financial institutions by transforming business account opening, because that's really kind of what we're talking about is using digital capabilities, transparency, et cetera, to drive not only a better experience, but also growth for financial institutions. At its core, account opening lets banks and credit unions open commercial and consumer accounts quickly, cost effectively, and most importantly, flexibly. Uh, it's built to be, and by it, I mean our solution, Mantle, is built to be self-service first, but that doesn't force users down a single path. If someone needs help, they can easily transition to a branch or call center for white glove service without dropping out of the process and without any loss of fidelity, striking the right balance between automation and human touch, which is key for financial institutions who are focused on scaling their operations. Here's what sets account opening apart and why we consider ours best in class. It's that it supports both commercial and consumer accounts through a single platform. A high percentage of new accounts board directly to the core, meaning less manual work for operations. Assisted service options like in branch or phone support are there when needed, but the platform nudges applicants toward self service by default. And finally, account opening integrates seamlessly with our data and marketing platform. So onboarding is driven by actual intent data and segmentation, not guesswork. So, what does that mean for your financial institution? It means you can automate onboarding at scale without having to add headcount or infrastructure. It also means faster time to deposit, fewer drop offs, and higher conversion rates. Financial institutions can grow their business and consumer client base without growing their support teams. And maybe most importantly, they can improve acquisition profitability by lowering the cost to serve each new account. The bottom line, this solution enables your financial institution to simultaneously grow revenues while also scaling costs. Alkami recently released our 2025 generational research report that focuses on consumer digital banking trends among account holders across different generations. And what we found is that among the percentage of survey respondents who said they operate a small business, there are a significant number of business owners that are using retail products for business needs. And in a separate survey, we found a similar trend of many small and medium-sized business owners using retail accounts with their financial institution to operate their business activities, resulting in a median monthly business expenditure of over $114,000. There's a clear opportunity here for institutions to identify these business clients masquerading as retail clients and offer premium business services and gain additional non interest income from those accounts. In our annual research study, where we evaluate digital maturity among financial institutions, and I referenced this a couple of slides ago, we asked financial institution leaders who offer business banking the following question: do you have the ability to monitor retail accounts for business related activity? And if so, do you do that manually or automatically? Not only do the most digitally mature institutions monitor for activity more than their less mature peers, but they're also much more likely to say they do it automatically. As we saw in the previous slide, there's a clear opportunity to win business accounts that are operating and masquerading as retail account relationships. However, many financial institutions do not yet have this capability in place. This is a massive opportunity to use your data to identify account holders who may be better suited for business products and services and expand those client relationships. At Alkami, we've given our clients the ability to really differentiate themselves from their peers by monitoring for retail accounts automatically and intercepting those account holders with an offer that introduces them to relevant business products and services. Many financial institutions have introduced business account opening, but the most digitally mature financial institutions have taken strides to further automate account creation for both core and digital banking. As I mentioned previously a couple of slides ago, 64% of the most mature institutions have implemented this strategy, seamlessly integrating account opening and digital servicing and eliminating manual account setup on core and manual user provisioning in online banking. At Alkami, that efficiency can be gained within the branch experience as well with our recent acquisition of Mantle. A true omni-channel experience enables your team to bring in new deposits and business owners across every channel: mobile, desktop, call center, and branch. And Mantle has done an excellent job of not only improving the user experience for the applicant, but also streamlining the process for your branch, mid, and back office teams. So once a client is onboarded, sustained engagement becomes critical. So now we're on that second critical area of engagement. At Alkami, we focus heavily on making sure our digital banking experience isn't just functional or transactional, but relationship driven, which means delivering the right insights at the right time, using data to understand client needs, and giving relationship managers the tools they need to be more proactive. This is especially critical during times of transition when the successor is stepping in and evaluating whether your financial institution is truly their long-term partner. So I'm going to shift to Terry once again. Terry, how are you approaching engagement in this new era of digital expectations and changing ownership?
Yeah, so I mean, we tend to lead with digital, customer experience first. So things like you mentioned earlier, the omni-channel experience, personalized digital services, self-service capabilities, and then real-time communication are key to really how that next generation wants to leverage their bank. We also see that business owners of the next generation really rely on fintechs and various different providers for different pieces of how they operate their business. And so we look for ways to integrate with those to provide other fintechs to those customers to allow them to better operate their business, but then also keep that all within the experience that we're providing them on the banking side. So I think you are seeing that banks are really fundamentally restructuring their engagement models to meet that digital experience, and then also maintaining the trust and experience that the people provide within banking, and really just being able to leverage that that relationship more than anything. We also have really partnered with AI-driven, sales enablement platform that allows our sales teams, to leverage transaction and payment data to drive different strategic, communications and insights to the customers. Also in, solving for business needs that, we may see across industries as well. And then we are seeing, consistent positive feedback from our customers, for leveraging Alkami for our digital experience. And this has really allowed us to transition, especially, being a community bank, transition from, a loan led relationship initially to allowing for treasury management to really lead and win with our customers today.
Well, and you just mentioned, kind of the impact of the Alchemy platform in terms of client engagement. Can you also touch on maybe the gains you've seen in operational efficiency since implementing the Alchemy platform?
Yeah, absolutely. So prior to moving to Alchemy, we did leverage a digital banking option that was provided by our core. It was not very intuitive for customers. Really just kind of felt decades behind from a technology standpoint as far as what you'd expect. This also led our internal operations teams to have to, essentially when we would onboard customers, we would have to manage all of the users, all of the access, all of the limits, all of the entitlements at the bank side. So what we had were our sales teams were often engaged in a lot of those non-sales related conversations. And so by moving to Alchemy, we were able to leverage the digital experience and the platform and the self-serve modules for customers to be able to take a lot of that into their own businesses, which we've seen huge feedback from customers that they really do like that ability. Even things like requesting temporary limits, limit increases, and things of the like. But we also saw from our sales teams that they were able to gain a tremendous amount of time back in their day. And so we have seen sales results um, go in a very positive direction because of that additional capacity.
Yeah, yeah, that makes sense. And so, what I'm hearing, and this is all things that that very much resonate with me. It's all about really taking something that community financial institutions are known for, personalized service, and driving that to digital engagement, leveraging data to better align engagement and capabilities to individual account holders based on their unique needs, and leveraging digital platforms to facilitate a better, more operationally efficient experience for both you, but also your business clients. And so I think that's amazing. And so let's double click a little bit further into this. Commercial users aren't just consumers with bigger balances. They have different needs, and we were just kind of touching on that, different expectations. And they're often managing teams, permissions, payments, and reporting. Our commercial user experience is purpose built for commercial users, offering powerful tools for control, clarity, and scale. From the first login, business admins can set up users, assign roles, and control access without needing to call support. Self service is critical to businesses, and that self sufficiency plays an important role when you're onboarding or expanding relationships. It's also key to financial institutions as well. We've designed our commercial user interface around real workflows. Payments and entitlements are intuitive and don't require an advanced calculus degree. Account and daily cash position views are consolidated, and reporting tools are easy to access and act upon. This gives financial institutions the ability to reduce the service load on your teams by enabling business clients to manage themselves. It enables financial institutions to improve retention through an experience that actually meets the business's needs. And it enables financial institutions to scale your commercial portfolio without the corresponding overhead. So instead of forcing users to adjust and conform to the digital banking solution, the digital banking solution conforms to the business user through streamlined access on business structure and roles during onboarding, advanced payments and entitlements with intuitive task flows for admins, visibility into balances, receivables, and forecasting tools, and scale to support mid market and growing business needs. So finally, let's look behind the scenes. at the administration tools that make scalable onboarding and servicing possible. One of the challenges in automating onboarding is maintaining control. Admins need to be able to define which products are offered to whom and under what conditions. That's where Alkami's FI admin tool comes in. It lets your team configure package rules, set thresholds for manual review, and monitor onboarding flows in real time. You're not locked into a rigid system. You define how automation works for your institution. For example, you might automate onboarding for lower risk businesses that require review for more complex entities. You're able to decide that with tools like package setup to define onboarding rules by product, tier, or user segment. Auto assignment logic to assign the right offer or trigger manual review under the right circumstances. Operational oversight to monitor workflow performance and intervene when needed. And finally, post onboarding management to adjust logic and packages in real time to improve outcomes. This control translates directly into business value. You get scalability without risk. You protect your efficiency ratio, which is a major driver in M&A and valuation conversations. And you avoid the trap of growing deposits while growing support costs alongside them. Alkami's FI admin gives you the confidence to scale through automation that works as intended. What we're emphasizing here is data, online new account origination, and the Alkami digital platform working together to drive growth, onboard users, and service customers with little to no manual intervention, resulting in high growth and profitability with low incremental cost. Now, for businesses, data isn't only about what you can access via digital banking. It's about a financial institution's ability to connect to a business's existing architecture, to enable businesses to leverage their existing applications and seamlessly integrate data, as well as payments and cash management functionality into the tools and applications they use every day. This is an expectation, and many financial institutions just aren't meeting it. In our annual research study, at a surface level, the vast majority of financial institutions said they had some form of accounting system or ERP integration with their digital banking solutions. But as we look at the details, we see a pretty big divide between the most digitally mature financial institutions and the least mature, where the most mature tend to be using APIs to deliver seamless bidirectional integration to accounting systems and ERPs. However, the least mature are more likely to say they're using CSVs or XML exports to achieve the same outcome. If a business is making a decision between your financial institution and a competitor, that decision may well come down to how well you can connect to that business's existing systems and data sources and deliver seamless experiences and seamless access to their financial data. However, data is just as important to the financial institution, which probably goes without saying. Business clients are looking for advisors, not just account managers. And at Alkami, we're helping institutions tap into real time data and behavioral insights to offer smarter, more timely recommendations, whether that's cash flow tools, treasury solutions, or succession planning resources. Because growth isn't just about selling more products, it's about adding more value. Our objective is to help financial institutions support businesses through every step of the life cycle, especially as ownership transitions become more and more common. So, a quick question again for Terry. Terry, how do you and your team think about supporting business clients beyond the basics during key transition points? And what strategies have helped you build trust and anticipate needs that lead to additional sales and deeper relationships?
No, that's a great question. I would say back on the last slide as well, just one point to add is, I think when we're looking at integration, I would say every bank feels like they could integrate better, and they could do more. And so, I would say, that really runs the gamut all the way from community banks to national banks, is that is a key focus on how do we integrate better to key ERPs. So I just wanted to point that out. But
Yeah, for
back
sure.
to your yeah, back to your question. I would say, it's kind of back to, what are the tools that you have at your bank to bring value to that customer. So a lot of large FIs, would have a lot of ancillary services or, I don't say items, products that are specific to a segment or an industry that really can help facilitate those transitions in a seamless way. They may have things like specialized advisory services, tailored financial products. Small banks really tend to leverage partnerships that we have. So, be that with other fintechs, with our digital provider, our core provider, but looking at different ways that we have the customer base, we have the data, right? So, how do we use that data in a smart way to be able to provide those value based solutions back to customers? And then also, really start to see trends in, if we see trends in payments or balances or things like that, and we feel like customers may not be headed in the right direction, right? How can we step in early to start facilitating some of those conversations? And so, once again, we do leverage, a lot of our longstanding relationships that we have with our business customers, and really provide a consultative approach to meet customers where they are. And I would say that, we specifically have, key business initiatives for diverse owned business communities that we really focus on in specialty markets that we have. And we have seen those continue to thrive because we have experts in those segments and in those industries. And we're able to really provide deeper value to those customers to help them be successful business owners.
Yeah, and looking forward, how do you see digital tools helping First Fidelity grow your share of wallet with existing businesses within those specialty segments you referred to, or just in general to help you kind of expand your client footprint?
Yeah, I mean, digital is clearly very important. I mean, we look at things like, even the app, right? And every bank, digital platform has an app, right? But business owners aren't sitting in the office every day anymore, right? Or even the accounting staff, right? And they want to be out there running their business. And so allowing business owners to have that experience where they can, approve payments or they can, pay positive pay items or things like that from the field has really been key. But continuing to leverage, how do we continue making that better, right? So if it's things like real-time alerts, if it's items like on the fraud prevention, which we'll get to later, right? But if we notice suspicious transactions or specific transactions or dollar amounts that don't look typical of a business, being able to provide that real time to customers, I think is going to be key. So I would say, the more you can do digitally, the more you can do real time, and the better communication you have is really where you're going to set yourself apart.
Yeah, I couldn't agree more. And your comment a moment ago about business clients and users not being stationary anymore. It's something I have a really, really strong opinion about and believe strongly that mobility will become increasingly important to commercial and treasury success because historically, treasury management solutions have been designed around the desktop, right? And today, quite literally, chain business users to their desk, which is totally misaligned with the modern business experience where they're on the road visiting clients and prospects, et cetera. So yeah, I'm totally convinced that mobility and digital engagement will be the driver for not only acquisition today, but also, kind of delighting your clients, your business clients from a servicing perspective tomorrow. And so let's pivot here quickly and talk a little bit about our data and marketing platform. It's the engine behind our personalized growth strategy. So we talked a little bit about the what. Now let's talk about at least part of the why or part of the how. Um, Business and credit unions, especially those who consider themselves community financial institutions, who pride themselves on providing personalized service, are finding it challenging to demonstrate that they really know the account holder, which is a little ironic. Displaying, for example, a first-time home buyer ad to an existing homeowner or mortgage holder is not only a waste of time, but it demonstrates that the financial institution doesn't really know the user. Today, financial institutions are sitting on top of a mountain of data about their account holders, but many don't have the ability to use it. Our data and marketing platform is the unlock that financial institutions are looking for, turning data into intentional engagement and delivering meaningful insights based on real time data. Financial institutions don't have to go it alone. Alkami handles data cleansing, getting your inputs right so the outputs are accurate, enabling you to segment your users intelligently and build effective campaigns that target real business needs. Now, let's look at how digitally mature financial institutions leverage data to drive differentiation. While data is a powerful tool for digital experiences, and I'm obviously biased towards emphasizing the power of data and dynamic personalization via the digital channel. It's not limited to digital interactions. Data can significantly impact those one on one conversations between your relationship managers and your business clients, informing those conversations with tailored insights and guidance that provide meaningful advice and engagement. In our business digital maturity research, we asked financial institutions the following question: to what extent do the relationship managers within your institution leverage client account activity data and client meetings to recommend products and services and to advise on financial goals? 70% of leading financial institutions say that they frequently or always leverage account holder activity data to inform client interactions and deliver better product recommendations and financial advice. It's clear that digitally mature financial institutions consistently equip their relationship managers with data for client meetings, allowing for personalized recommendations and support and deeper client engagement. So, if you're not currently democratizing data across your organization or your institution, it may be time to make a change. Data is the key to driving retention and deeper product adoption, and it's foundational to a personalized client engagement. So, now let's kind of keep going. So far, we've talked about onboarding, engagement, and growth, right? But none of that matters if your business clients don't feel secure. Fraud is getting more sophisticated, and businesses are increasingly vulnerable, especially during leadership transitions. At Alchemy, we take a layered approach to fraud prevention, which includes tools like positive pay, real time alerts, behavioral monitoring, and analytics to help financial institutions detect threats early and empower clients to take control over their own security. So, Terry, question for you: how is First Fidelity approaching fraud prevention, and how are you helping business clients feel more confident?
Yeah, so I mean, you hit it on the mark. Fraud is definitely increasing, right? So we've seen check fraud, ACH fraud for decades now, right? And those continue to still be big, money makers for fraudsters. But now we are seeing, more sophisticated fraud schemes. So imposter fraud, account takeover, compromised networks, you name it. There's definitely more out there for businesses to be careful about and making sure that they are protecting their data, their credentials and their users and passwords and things of the like. We've you I think a lot of banks have really explored, how do you be as proactive as you can and how do you protect your customers? So, clearly, offering fraud prevention services is still, our key way to really help customers see that on the front end from a check and ACH perspective. I would say on the more sophisticated schemes, what we're seeing is a lot of education, and that continues to be key for banks to provide to customers as far as understanding what the trends are today, making sure that you are not opening attachments, clicking links, right, and giving people your credentials, and making sure that they are keeping up to date with that education. I would say a lot of banks, what we're looking at now is how do we take it one step further from a liability standpoint, of making sure that we are very clear where the liability does reside when there is a loss for a fraud situation, and just making sure that customers feel that we have provided all of the the consultation, we've provided all of the solutions to them to really make a decision on what works best for the business. And in the end, if they do decline that service, they ultimately do assume risk if there is a fraud loss in the future. And so I think a lot of banks are really transitioning that because we have seen so much additional fraud loss that historically banks, have carried a lot of that weight. In addition to that, I mean, things like multi-layer security strategies that we're looking at that we track, internally using BioCatch, which is an Alkami tool. And that really looks at, transactions that are outside of normal business hours, different IP addresses, geographic locations, changes in, payment volumes, recipient patterns, recipient payment instructions, any sort of unusual requests, new users who've initiated transactions, things like that, to where banks have to also be smarter because our customers, while we are educating them and they do assume that risk when there is, account takeover or a situation that is very sophisticated and complex, the banks want to do everything that they can to protect that customer and protect that relationship. And so those types of tools are very key to businesses. And we've been seeing that, on a daily basis with our BSA fraud teams, our sales teams, our operations and service teams as well.
So, I guess 2 quick follow-up questions, because 'cause I'm the king of stacking questions on top of one another to confuse people. You've mentioned a few times, kind of the role education is playing in your overall kind of fraud prevention strategy. And I think a lot of financial institutions would say, "Yeah, I think they'll agree with that," but are probably asking, "How do you do that at scale?" Can you talk a little bit, 1, about how you're helping clients, like the how? How are you helping them better understand the tools that are at their disposal to help them kind of manage their own risk? And then question number 2, you mentioned using capabilities like BioCatch. Can you talk a little bit about how other tools, like maybe Positive Pay, are giving your clients peace of mind and helping to reduce, kind of fraud incidents overall?
Yeah. I mean, I would say at this point, I don't know that many business owners really have peace of mind, right? Even if they are fully protected from every fraud prevention service that you have, even if they are educating their staff, even if they are using tokens and MFA, I think there is still a level of fear that is out there, right? And so, to your question of, BioCatch and what tools we're using, I mean, I would say it's really that consultative approach. So you go back to the data, right? Using customer payment data to provide tools that add value to their business. So Positive Pay and ACH Positive Pay are clearly tools that should be on every, customer conversation that every bank is having with every business customer, right? And so, but allowing them to see, okay, do you have the right level of fraud prevention on each of your accounts and making sure that we're, providing that to them to say, are you protected or not? And I think in the past, customers were a lot more likely to maybe decline that and really run the risk of, is it going to happen to me? Whereas now I think a lot of customers are really viewing that as an insurance policy. We're also seeing customers who are getting, cyber insurance and things of the like to protect them from, more sophisticated schemes. But that is definitely something that is really in all of our conversations. And then I think to your earlier question about was it fraud mitigation? Sorry, you really did stack all the
Yeah, I
questions
did.
on there.
It's kind of the question is, kind of actual, kind of practical advice on how financial institutions can educate their clients around these tools. Because the thing that I always think is interesting is a doctor doesn't own or doesn't start a medical practice to start worrying about fraud risk mitigation, right? There are all these tools. It is not kind of top of mind to them typically. So I'm curious, kind of what methods you've used to really help them understand and motivate them to adopt. I think FIs could really benefit from that.
Yeah, so I mean, in the past, I think a lot of banks, ourselves included, we would do longer length webinars, right? Or in person, kind of lunch and learn type of topics. What we're seeing now is that that's a lot of time for a business owner or an accounting person to take out of their day. So we've really transitioned our education to scannable QR codes that leverage 5 to 7 minute short videos. A lot of times there is, even some humor, right, grabbers behind those to help people stay engaged. But then also hitting customers more frequently with those types of educational tools. So, many banks, either your core provider, your treasury management service provider, if you use a sales enablement tool, there's oftentimes a lot of free recorded material that you can leverage from a bank perspective. And so the more you can get that out in front of customers, the better result you're going to have.
Yeah, for sure. And yeah, sorry for stacking questions on you. Again, like I said, I'm known for doing that, especially in interviews, right? So, okay, guarding your business clients is based on your ability as the financial institution to stay one step ahead of fraud and account abuse without putting up walls that frustrate your users or inhibit productivity. The most secure platform is one that no one can log on to, which obviously defeats the purpose. So, this is really all about balance. The Alkami digital sales and service platform, as we've mentioned, takes a layered approach to security, starting with real time detection, where behavioral biometrics and credential stuffing protection run silently in the background, monitoring logins and user behavior for signs of takeover or bot activity. Responding immediately to suspicious activity, like a new account opened with stolen credentials or a check presented that wasn't issued. The platform protects the digital channel with validation tools like ACH and check positive pay, as we've discussed, digital identity checks, transaction scoring, and even step up authentication. Threats are stopped at the point of entry using intelligent rules, alerts, and self service controls. The Alkami digital sales and service platform also gives your fraud teams the ability to respond faster to incidents, disputes, and other situations using structured insights and fraud extract reporting, resulting in less time digging and more time acting. Ultimately, Alkami delivers what you, your account holders, and businesses need: protection that's always on, always evolving, and built into every layer of the platform. That's how you deliver confidence, and that's how you keep that confidence. Now, let's expand the conversation from fraud prevention and remediation to security monetization. In our business digital maturity research, we asked financial institutions the following question: do you offer your account holders self service security and fraud remediation tools? And if so, do you have the ability to charge for those capabilities? What we're starting to hear from the market is that security and fraud is obviously a cost of doing business, but for business account holders, this might be an opportunity for non interest income. The most digitally mature financial institutions are able to not only provide self service fraud prevention and, remediation, but also, and maybe more importantly, they have the ability to charge for this service, driving new revenue opportunities. Now, I want to shift gears and provide a real world example of some of the tangible outcomes a financial institution is able to achieve using Alchemy's digital sales and service platform. So, again, question for Terry. Terry, can you talk us through some of the outcomes you've seen at First Fidelity since adopting the Alchemy platform?
Yeah, absolutely. So, I think the biggest thing for us was really the speed, right? The speed in which we can um, get customers onboarded and really start, growing that relationship. And so, with the Alchemy platform, which we converted to about a year and a half ago, we were able to cut our onboarding from new account opening all the way through, a customer using their digital platform and their treasury tools to typically about under a week. Um, I've seen this as far as, 60, 90 days with financial institutions in the past. And so this was a huge win for us. And this is a way that we can differentiate ourselves in the market, especially when competing against larger banks. Our teams, I said her earlier, that some of the ability that the digital platform enabled them to really have customers self-serve and or have our service teams take on has allowed them to increase productivity from a sales perspective. And so, where we are today, not even, all the way through Q3, is that our entire sales team has already met their annual sales goal, which is fantastic to see. Clearly they're continue to grow. They all expect their goals to go up next year. So I'm sure every sales leader from a bank on the line knows what that means. But we are seeing very positive results from a sales perspective. Even during our conversion, typically you look at about 5% attrition during a digital banking conversion. So, you've got 5% of your customer base that just says, if I'm going to convert digital banking platforms and you're going to force me to do this, I'm actually going to look at other banks and potentially leave your institution at that point because it is a huge pain point. While no conversion is perfect by any means, really the additional intuitiveness and um, you know usability of the Alkami platform, even during our conversion, we were able to grow our customer base by about 14%, which is fantastic. And so, while we did lose a few customers, at the same time, we were able to grow it and grow them with bigger customers during that transition. So our sales teams definitely saw that, and the ability to go out to the market and lead with treasury management was a huge win, and quite frankly a cultural transition for our bank. Um, that being said, we were able to really um, essentially pitch and win deals even before we were fully converted. So we had customers we were onboarding onto the Alchemy platform even during a pilot phase, who were already seeing the additional user experience that they were gaining, and how positive it was for their business. So all in all, I mean, we've had a fantastic partnership with Alchemy, since our conversion, and the business does continue to grow, and I think this really does set us up for a scalable treasury management solution in the future, and one that you talked through each of the segments earlier, but continue to grow with our customers, and also continue to leverage the digital platform for those key transitions in business lifestyles.
Well, thanks, Terry. Those are amazing outcomes, and it's obviously very satisfying for us to hear, and we obviously truly appreciate your partnership. Now, looking at the clock, I know we're nearing the end of our time, and I know we've covered a lot of territory today. And I'm guessing that many in the audience are wondering where your institution sits in the spectrum of digital maturity that we've referenced so many times during this presentation. So you have an opportunity to discover how your institution stacks up by taking an assessment and reading our report for more digital maturity insights. So go ahead and snap the QR code on the screen. I'll give everybody a minute or two to do so. So go ahead and do it. Take advantage of this. All right. Hopefully that's enough time. Everybody is hopefully snapped and navigated. And so with that, that's all, folks. I want to thank Terry for joining us and for providing so many insights. I appreciate you not only as a webinar co-host, which has been fantastically fun, but also, again, as an Alkami client. And I'd like to thank the audience. Again, thank you for joining us today. I hope we have another opportunity to engage again in the future. And I hope everybody has a fantastic week. Thank you so much.
Thank you, everyone.